Hi everyone, welcome back to ESG Decoded. I'm your host Kaitlyn Allen, and today we are really excited to talk to EcoVadis. So many of you may know what EcoVadis is. If you don't yet, you're about to find out. We have Christy Cooke joining us from Europe, from France specifically. And Christy is the head of capital markets and ESG finance, Northern Europe for EcoVadis. Christy joined EcoVadis in April 2018 and currently leads the growth of EcoVadis's capital markets and ESG finance solutions for Northern Europe. He has over 10 years of experience working in the sustainability field with roles in both NGOs and the private sector, covering project management, assurance, advisory, and client management. Previously, Christy worked at CDP, working closely with investors and companies on environmental disclosure. And prior to this, he was a manager at the Carbon Trust, leading partnerships and operations for the assurance services team. Christy, thank you so much for being here.
Pleasure to be here, Kaitlyn.
Let's start with what is EcoVadis. So probably most of our corporate listeners will be familiar with this, but for anyone who isn't, let's just start with the basics.
Sure. Well, in a nutshell, EcoVadis is an ESG ratings agency. So there's a number of ESG ratings agencies out there, just like there are, typical credit agencies as well. We've been around for the last 16 or 17 years or so. So we've been around for quite a long time. And our job essentially is to rate the ESG performance and maturity of companies all around the world, in line with environmental, social, and governance parameters. And we do that, but we also provide extensive feedback so that the companies we're rating understand, all right, where do I go from here? How do I improve on the E, the S, and the G?
And for our corporate listeners who have had to fill out an EcoVadis questionnaire, they know it's incredibly extensive. And I will say probably I've done this over a decade, probably one of the very first surveys that I ever supported a company with filling out. So let's talk about that original use case, right, which was mainly supply chain focused, if I recall. So why would a large corporation use EcoVadis to survey their supply chain?
Yeah, very good question.
Or why do they? Sorry, not why.
Yeah, I suppose, a lot of companies that have been rated by EcoVadis, by ourselves, they've only seen one angle of what we do, which is obviously, hey, we're going to ask you a load of questions. We're going to ask you to provide documented evidence so we can validate the claims that you're making on environmental, social, and governance practices. But 90% of the time, or 90+% of the time, we're doing this because another stakeholder is requesting us to do this on their behalf. So unlike perhaps some of our peers, some of our other ESG rating agencies in the market, who rely more on publicly available information, we have this kind of solicited approach. And the reason we have that, at least when we first started as a company, is because we were working very closely with large corporates who wanted to get more of an understanding and more visibility into the ESG practices of all those companies they were purchasing goods and services for, that they were partnering for certain R&D projects, etc. And they wanted to get an understanding of, are these responsible businesses? Should we be partnering or should we be buying products and services from these kind of companies? Because naturally it came up in the boardroom. How resilient is your supply chain? How sustainable is your supply chain? And we saw that, very evidently when the COVID crisis hit worldwide. Supply chains were hit and affected and impacted quite significantly. And I guess ESG was a bit of a proxy to understand what is the resiliency of a large corporate supply chain, and what are the potential, not just sustainability risks, but also kind of linking that to potential financial risks in terms of supply bottlenecks, etc. So we started working with corporates 16, 17 years ago who wanted to get that visibility. And for that, we needed a specific approach to be able to do that. Being able to rely on publicly available information was not going to work. If you take a large corporate supply chain, 80, 90% of that is small to medium enterprises, non-listed companies. So you're not going to be able to find information on the ESG practices of these companies in the public domain. So we created this engagement model that does send a survey. But what we do try and do once we've received information from a company is to make sure that we're providing them with critical feedback in the results we provide them with, so they understand how we've rated them, how we've scored them, what does best in class look like, what are the best practices they can learn from, so they can take the next step forward, not just say, thank you for submitting all these answers, and we'll come back to you in a year or next time. We wanted it to be, a two-way process, and that is now, up until a few years ago, I would say, we became a purpose-driven company. So there's a specific status, a bit like a B Corp certification in France, where a company can become an entreprise à mission, which is a mission-driven, purpose-driven company. And so our purpose is to guide all companies to a sustainable world. So we have a mandate or responsibility in our charter, in our purpose statement, to help companies improve on ESG.
That's super interesting. And I'm so excited to get into this conversation about best practices for responding companies, because that's, I know exactly what most of our listeners are probably sitting on that side of the table. And so let's spend a little bit of time on, you're the general counsel, or you're, in a role at a company, and the EcoVadis survey comes to your desk. Now, these are, like you said, usually companies in a very large supply chain, but sometimes they could be small, but sometimes they're huge multi-billion-dollar businesses as well. So at least a lot of the ones we've worked with to go through the process. So let's talk a little bit about best practice. So if I'm that person, I'm the general counsel, or I'm of counsel at a company, we receive this questionnaire wherever I sit, and how do we go about responding? What are the best practices? How do we know what to do to start?
Sure. Yeah. So, I think off the bat, the first thing I would say is don't just treat it as a survey, treat it as a project. So like you would do with any other project internally, is you'd organize yourself. You'd involve other colleagues. If we look at ESG, it's a very broad scope. So it's never going to sit with one person. If you're the general counsel that's been, assigned and responsible for this, you're probably going to have to involve colleagues in HR, health and safety. If you have an ESG or sustainability team, of course, you're going to need to involve them, or they might be the one leading this. So there are a variety of different stakeholders internally and actors that need to be involved in this, that need to provide their own expert input into this to get that full picture of the company's ESG practices. And some of those you might not necessarily think are ESG topical, but under the EcoVadis rating process, they are. So that would be my kind of first advice. Treat it like a project, not just a survey, and then organize yourself. If you can, I would strongly recommend flagging this or raising this topic as high up the hierarchy as possible. So to the board level, to the C level, to senior leadership level, because, okay, maybe this isn't at the forefront of their agenda, or maybe this isn't a priority right now for them, but they're not going to want any surprises down the road. So the worst thing you can do for yourself as an individual is keep this to yourself, go through the process, then you might get the results and not be very happy with them. And perhaps some external stakeholders, they could be B2B customers of yours, they could be investors, they could be lenders, have this, and maybe they share this with your C-suite. And what you don't want is, your CEO or someone else in your senior leadership team coming back and saying, hey, what's this? This is the first time I heard of this. Why wasn't I notified of this before? So I think keep that internal professional courtesy, even if it's just to notify them. If you can, try to get them involved at a kind of sponsorship or at least global oversight level, because more and more companies will be interested in the results, how they're being perceived by other stakeholders through an EcoVadis rating. So that would be the kind of the main points of advice I would give. And coming back to treating it like a project, give yourself enough resources, enough time, and give yourself a timeline in which to complete this, because what you don't want is this dragging on and on. We don't want it dragging on. You don't want it dragging on. You've got your day job to do. So let's carve out the time that's required for this. And then in subsequent years, it can be part of your annual cycle of doing these types of things, whether it's trying to align it with certifications that the company is going through or annual reporting. A lot of companies do that. They have an annual reporting or disclosure cycle that they kind of try to align their EcoVadis rating as closest to as well.
Mm-hmm. So let me summarize. So I hear a few key points for best practice, and especially for those doing it for the first time at a company. Don't treat it as a survey, treat it as a project, which means organize internally, make sure you're engaging the right stakeholders. 2, make sure to notify as high up the hierarchy as possible, even if it's just for notification, so that the first time they're hearing about it is from you and not someone external. And then if there is executive sponsorship or oversight, even better. But at least get that notification. And then finally, as you get more practice and get better at it, trying to integrate that into your existing reporting cycles to the extent possible.
Exactly, yeah.
Awesome. Thank you so much for sharing that. And, I think another point on this that comes up a lot for companies that we're maybe supporting to help fill out their survey, their project, is scoring. So I know there's been some sentiment in the market that EcoVadis can be a bit of an enigma, and I don't understand how I'm being scored. And so I guess one question that I know is burning for a lot of our clients is, how are EcoVadis moving toward transparency on this?
Yeah, it's a very good question. And I think it's something that all ESG rating providers struggle with. I mean, if we look at the market, there have been numerous kind of comparisons of how credit rating agencies align, but ESG rating agencies aren't. I don't think you can make that comparison ever, because ESG is so different. But I think there are ways in which we can make it less of a black box. One of the things that we have done at EcoVadis just recently is we have launched a kind of process or a module on the platform within a company's account, where they can get a bit more of an understanding and a bit more of a breakdown of how we came to a certain score, not only at the overall level, but across the 4 different dimensions that we look at. So environment, labor and human rights, ethics, and supply chain as well. And that is supposed to give a company more of an understanding of what are the main areas that I need to work on going forward, and it's supposed to provide more transparency to the market. But we do need to be careful and strike the balance between opacity and transparency. One of the reasons for that is, what we don't want is companies, and luckily I can say, this is a very small minority out there that do this, but there are companies that try to game the system wherever you are. It doesn't have to be on ESG, it could be on something else. So if we give too much transparency, there is the risk of, gaming the system to a certain extent. We have a lot of safeguards and measures in place to try to prevent that. But, there are times when it's harder to do so, of course. And the other thing as well is that our methodology works holistically. So when we provide a company with an overall score, we're looking at everything. So if a company in 1 year to the next year improves in a certain area, what we say is that could improve your score, but it's not guaranteed. Why? Because if everything else stays the same or some areas lapse, but you improve on that area, that isn't a holistic view of performance across the company. And so what we need to make sure is that the good practices that companies already have in place are being maintained and maybe even being pushed further in improvement processes. And then the low-hanging fruit or the areas of improvement are also being worked on. So it can also there can be a risk of providing expectations that do not deliver. If we say, if you do this, you will improve your score, because it's not guaranteed. So it's about striking that balance, but we're looking to kind of develop more transparency as we go ahead. And I think there are other, market shifts that are going to help this as well. Specifically in the European Union, there are calls for regulating ESG ratings providers, just like credit ratings providers are being done. So that will certainly, encourage and foster more transparency in the market as well. And that's something we definitely welcome. And I'm sure a lot of our peers do as well.
Yeah, I'm sure that's welcome news to a lot of folks, especially on the corporate side. So thanks for sharing that update. You mentioned capital markets, and I know that's your area of focus. Let's shift over to that for now. Why don't we just start with trends? I know you have a lot of thoughts on this. So let's just start there.
Yeah, sure. So I think right now, if we look at the capital markets or ESG in finance, I think what we're seeing is a big shift from where we were previously, especially in Europe. I mean, that's my area of focus. What we're starting to see is more convergence of disclosure and regulation that is encouraging or mandating certain types of disclosure. So, you have the European Union SFDR, the Sustainable Finance Disclosure Regulation. Then, of course, you have what will come out potentially later this year is the UK's Sustainable Disclosure Regulation, which is an answer to the EU's SFDR. You've also got things like the CSRD, which is focused on corporates. And then also on the supply chain space, we're expecting mandatory due diligence coming out in the European Union soon as well, through the CSDDD, so the Corporate Sustainability Due Diligence Directive. So a lot of acronyms to deal with. I was going to say,
and there was one we missed defining. So CSRD, for anyone who isn't familiar, is the corporate reporting. Hold on.
Corporate Sustainability Reporting Directive. Yeah.
Thank you.
So I think There are a lot of regulations coming that is changing the behavior and the landscape of the market, because you'll have always had those pioneers or first movers that have been voluntarily doing this within the capital market space, within the supply chain space, within the corporate space. But now everyone's going to need to do this, and it will be staged. It will start with larger companies or larger funds, and then move down to smaller companies and smaller funds. But we are seeing traction in the market in moving towards this disclosure regulation. I guess on the plus side, and mentioning convergence, all these aforementioned regulations are interlinked or are aligned to a certain extent, which will be a relief for many stakeholders in the market, because it means that you can do one thing that may potentially, meet the needs of multiple regulations depending on who the stakeholders are involved. So this has obviously called for a lot of transparency on what companies are doing, what their investors are doing, how supply chains are being managed by large corporates. And there is a thirst and a need for ESG data at this point. So we're starting to see a lot of companies kind of rallying around this, essentially, especially in Europe.
And I understand as well. So the EcoVadis has traditionally been a cornerstone of this customer-supplier relationship. But I understand there's a lot of interesting new use cases as well in the capital markets. So let's talk a little bit about that. What would be a use case for EcoVadis in capital markets?
Yeah, sure. These kind of use cases actually came across our desk quite opportunistically at the beginning, a number of years ago, where we realized that the EcoVadis ratings were not just being used in that B2B customer-supplier relationship, but banks and financial institutions had started using it to create ESG-linked lending products. So our ratings are used in supply chain finance, trade finance. They're also used in revolving credit facilities as well, or one-off single-term loans for corporates. And fast forward a couple of years, more recently, they've started to be used by the investor community as well, mainly by private capital, so private equity funds, private debt funds, those kind of stakeholders. But we are seeing our ratings being filtered up into, institutional investors as well, pension funds, insurance companies, things like that. Less so because those stakeholders obviously invest in a variety of different strategies, not just private capital. They invest in the public markets as well, where there are a lot of other ESG rating agencies to help service that visibility and transparency on ESG practices of companies. But this should be welcome news to anyone's that's listening that works for a corporate that needs to go through an EcoVadis rating for one use case, because we now have multiple use cases. So if you're not being asked right now by an investor or a lender for your EcoVadis rating, that could change. You could be asked in the future as more and more of these types of what we call requesting stakeholders start to ask for this information from companies that have EcoVadis ratings.
Yeah, I mean, in our experience, sometimes the lender is actually asking the company, okay, well, you give us your ESG information. The company saying, well, what do you want? It's kind of, and that's evolved. I mean, that particular case in my mind was a few years back, and so it's definitely evolved. But it is interesting to kind of already have done the exercise, and in a way that's clearly well received in capital markets if you're going to seek that type of financing, whether it's, like you said, single term loan, revolving credit facility, whatever it is. So very, very interesting. Hopefully get multiple types of value from doing it once.
Exactly. And we see, we always ask when we're talking to whether it's an investor or a lender or a company or a corporate, how come you came to us? Where did you hear from us? And typically it's another use case. So we've had examples where, a private markets investor came to us because they said, well, we wanted to know how we could potentially use you for our investment portfolio, because actually it was a bank that we work with that recommended you guys. And so we're starting to see this cross-pollination use cases of the EcoVadis rating, which obviously ultimately brings a lot more value to anyone that is either using the rating to get an understanding of the company or going through the rating process as a company to communicate with stakeholders about their ESG performance and maturity. So it's starting to have this kind of organic network growth and use cases, which is essentially, it's great that it's happening because it's what we envisioned or wanted to happen in the first place.
And if that would be a great place to end, but I actually have another question that wasn't planned. If a company does do EcoVadis, I mean, how closely aligned are you with a number of the regulations you mentioned? So if I fill it out, am I kind of good to go, generally speaking, or are there tweaks being made to make the survey align with regulation?
Sure. Yeah. I think maybe I can answer this by turning it into a piece of advice for your listeners when it comes to solutions that help you comply with regulations. I think where we are at the market, especially in the European Union right now, is that there is some regulation that has already been defined. But there is a lot that hasn't yet been defined or going through consultation phases or, are going through several iterations or versions of the regulations. So they're likely subject to change. So what I would say that we do is our job as an ESG ratings agency is to make sure that our finger is on the pulse of those, because the moment we step out of alignment with these upcoming regulations, we get more and more redundant for people that are using us for this purpose. I mean, regulation is always going to be the foundation, and then anything on top of that is extra that companies will do. So if you do have providers on the market saying that, yeah, we can comply with this and that, etc., approach it with a bit of caution, because a lot of these regulations are still in the works. They haven't been finalized. So I'm not going to say that, if you go through EcoVadis, you 100% comply, because I can't, because in some cases, the regulation isn't even defined or confirmed or written yet. So I think that is something that you need to pay close attention to. And just be sure that you're partnering with the right solution provider or company that can support you on that journey, because this is just the starting point at this point in time.
Well, Christy, thank you so much for being here and helping shed more light on EcoVadis. I will open it to you if you have any closing thoughts before we wrap up.
No, I don't think so. I mean, I think anyone who probably listens to this podcast knows that ESG, sustainability, responsible business conduct is here to stay. There might be setbacks, backlashes, politicized or otherwise. But I think, all of that is good to make sure that us as ESG professionals are kept in check. Uh, you know, we need a wake up call every now and again to make sure that we're on the right step, that, you know, we're tackling greenwashing and things like that. So, you know, power to us, and let's keep on powering through.
Sounds good. Thank you so much, Christy. We really appreciate it. And we will definitely share links in the episode notes for anyone that wants to learn more. And we look forward to the next one. Thank you.
Thank you. Thank you very much for having me. Bye-bye.